But it's Diwali time and we've got the market stalwarts joining in hour after hour. And let me take it across to Nikunj. He's got Raamdeo Agarawal in conversation with him.
Mr. Agarawal, fantastic to have you back on ET Now. Thank you for joining us. Wish you and your team a happy Diwali. We are calling this year Naya Saal Nayi Shuruaat. So I hope indeed this is a Naya Saal Nayi Shuruaat for you, your family and your firm.
Yes, let me wish your viewers a very happy Diwali and a fantastic year ahead, because we have a new government, we have a tremendous mandate, and so fantastic time ahead. आप ही खुद बोले नया साल नई शुरुआत.
Will this be a Naya Saal Nayi Shuruaat for Motilal Oswal Financial Services? Before I get into specifics, I want to talk about your numbers. Same time last year, everybody, including me, we were worried about HFCs. क्या कर दिया? What is happening there?
See, when we build, business building requires time. At least at our end, definitely requires time. Nothing, I mean, we keep doing wealth creation study, we have seen, nothing builds in 2-3 years or 5 years. It takes time. So we took about 7-8 years for the AMC from 2008 to 14. 14-15 it broke even. Broking also, 87 we started. By 1991 when Harshad Mehta Bull Run came, that time we broke. So it always takes some time, one failure first. And then from there, if you can get up, that's the solid company you build. So HFC, same thing happened. We took off like a rocket in 4 years back. And last year we saw that on the back of demonetization and our own rapid growth and kind of a lack of understanding of the space, we had a problem. But now this quarter, everything is sorted from, as far as I understand, in terms of creating a clean deck for this company to become even more cleaner and much deeply understood kind of in this space. So now we'll have a company which will claim to say that we understand this business, and will stabilize first, then consolidate, and then slowly start growing at 5, 7, 10%. Growth is not prerogative even now. Right now it is clean, but we want to make it even cleaner.
When you say clean, what do you mean by this?
Clean means, as it is seen, what are the stress assets? In lending organization, how much is the stress asset? So it used to be about 6%. So now after this ARC transition, which we have done in this quarter of about 540 crores, it is just about 2%. So that's a normal level of gross NPA, and net NPA is about 1.75 or something like that. So we are now, as far as current management team is concerned, it's absolutely clean, this thing. And the book is behaving the way it should behave. The old book, new book is what we have created in 1.5 years, is absolutely pristine. It's literally like 0.1 or 0.2% gross NPA. So we understand what to underwrite and what not to. But we have become so conservative that we are literally not underwriting little bit of risk, because if you have 0.1, 0.2% kind of gross NPA, obviously you're not taking enough risk. So and at that level of risk taking, I don't think you can build a book. So we'll now, from here onwards, whatever understanding we have and new team we have, I think we'll go a little more at a faster pace, and we'll try to stabilize the current book of about 3,900. But the whole effort is not to grow faster. The whole effort is to make this 3,000, 4,000 or 4,200 as an absolutely pristine kind of a situation. So one, I will not have pressure on the liability. Second, my current liability cost will start coming down as the quality of the book starts improving. And whatever we have conducted, I think all the rating agencies and everybody lender is seeing how Motilal Oswal has stood by their franchise. I think the cost of lending or cost of borrowing for us will start going down, which is the biggest margin you can have, because home buyers are not going to give me even a penny more. I can only make my operating cost lower, my credit cost lower, and my liability cost lower. So that's what is going to be effort for at least 1 more year, and then we'll see how it works. Opportunity size is immense.
Yeah. And now you have a you have a large liquid balance sheet, which means at a time when others are suffering, you can really lend more.
Yes. I mean, we don't have problem with equity. See, others have problem of equity. Today we have a very liquid equity base. I mean, we can give 500,000 crores of equity to this company, but this company should deserve to get more equity.
But you will not get into real estate lending? Or
no. Our hands are full with what businesses we are doing. Broking, broking, wealth management, asset management, and housing finance. This is enough. I mean, I think the current management team and we are not number 1 or 2 in any one of them. So there is a lot of scope for us to vertically go up rather than horizontally start anything new.
The mutual fund industry has seen, it's not a shakeout, but it has seen a little bit of churn. You always have run the mandate and you've always had the message that, look, if you invest with me, I will give you quality stocks. It may not do well in 6 months, it may not do well in 12 months, but it will certainly do well in 3 to 5 years. Given what's happened to the market right now, what's happening to AMC business?
Yeah, so it's very stable. You know, I mean, we started actively big time in 2014. So 2014 to say 17 end, almost 4 years, we had, I mean, world-beating performance. Not a best performance, but world-beating performance. 15-70% compounded kind of outperformance. So that couldn't have continued. So we were knowing reversion is going to come. Reversion to mean is going to come. We are going to have our own set of underperformance because you can't squeeze same lemon. And then we had in last 12 months, or say in 18-19, we had one of the worst performance vis-a-vis the index.
Of course.
Performance was not bad, but against index went up by 12-13%, we were up by about a percentage or two. So we had underperformance about 12%. So now that underperformance has become the base. So after 12 months, now we are looking again one of the best performing funds on a 12-month basis. But if you look at 5 years and all, in any case we are the best. I mean, like our ranking is in top 2, 3 or 4. So, and not only one fund.
Fresh money started coming.
No, right now still that's a market takes time to absorb from a negative to positive. It takes time, and but there's not any major outflow. So we are sitting on 38-39,000 crores kind of AUM, and we are pretty happy with that. And I mean, it will take its own time. I mean, let this outperformance, the turnaround of the performance is only 6 months old. So I think the investors, the existing investors, the new distributors, I think they will grasp this maybe after 3-4 months. I mean, it takes time. I don't know when it will happen. Maybe post Diwali, Nayi Shuruaat, Naya Saal Nayi Shuruaat could happen. Right. But I'm not in hurry to get get to more money because this $7 billion is a lot of money. Again here, the whole stress is not on the growth. The whole stress is on improving the competence. Because we are going to get, I mean, the industry is going to get tons of money. You cannot believe the amount of money which is going to come. In next 10 years, we are looking at almost 100 lakh crores of equity mutual fund. So, if you can manage well, you will have enough of it to manage. The issue is, can we manage well?
That's a point.
So that's I mean, my whole stress to everybody, I mean, whether it is HFC or broking or here, we have to improve the competence, and outsider customers are looking at you. They would like to go to the best possible place where you get the best sweets. You don't have to go and tell, I mean, it's word of mouth.
Word of mouth, yeah. Word of mouth. Reputation is all word of mouth.
And it's all data driven. I mean, data is all over there.
There is a very large prop component in your book that's lying in your balance sheet.
That is a unique part of it.
That's a very unique part.
Yeah.
Nobody really talks about it. You know, we focus on broking business, we focus on HFC. I will ask you an odd question on AMC.
Yeah.
What is the size of your prop book, if you can share with us?
Yeah. And so let me explain you how the company looks.
Sure.
See, it is this quarter our net worth is about 3,300 crores. Yeah. Of that, 2,000 crores is the prop book, in the sense that that's lying in mutual funds and private equity investments.
That's the money of the company. Which is lying with.
Yeah, it is a cash and cash equivalents, but it is not in cash form. It is in either mutual fund form, in public listed, and about 450-500 crores in private equity, which is a little less liquid, but it is under private equity. So all of them are equities. So 2,000 crores equity, and now thanks to this government and finance minister, they have removed the MAT on unbooked profits, which was the main pain point for holding this stuff in the. So now what is going to happen is, if we don't book profits in this portfolio, so we are going to see, but we have to mark to market through P&L. So say next 6 months, market goes up by say 10%. So on this we get say 200 crores mark up of the portfolio. The whole thing will come in PAT.
And you will not pay, it is PBT.
Because
you are not booked anything, so you will not pay taxes.
Yes. Logically, actually, we must say that this is not operating profit. So I have two components of profit, that 1,200 crores which is deployed in the operating business, like broking, asset management, wealth management, private equity. They have operating profits. So that's about, I would think about 400 to 500 crores depending on the time. That's absolute free cash flow with no charge.
So the book value keeps on growing.
The book value keeps growing, and the balance is whatever happens to mark to market positive or negative. So that will bring a lot of volatility as the book size keeps growing, because we pay out about 1/3 of the profits for the shareholders, and 2/3 remain in the book. But in the book, we don't go to the fixed income; we go to the equity.
What is the CAGR return of this prop book of yours?
I think as of yesterday or something, it's about 17-18%.
Okay. So it has scope of giving a double-digit return in next 5 years.
At the high, it was about 25-26. It is at the low right now. Because of.
So this is another trigger where if the prop book does well, if market improves,
it will do well.
It will do well.
It will do. See, the company is wired around equity. My asset manager is centerpiece.
That's a great point. That Motilal Oswal franchise is wired around equity.
So equities does well,
if you're
broking
bullish
does
on
well.
equity, Motilal Oswal as a franchise.
That's the place to go to, because broking does well, asset management does well. But when asset management does well, the underlying, see, we are the biggest investor in our asset management company. So if I'm managing 38,000 crores, of that about I don't know. I think about of the total 7-8% would be my own money.
Okay.
Prop money. Prop money. Yeah. So
that's a very large company.
Yeah, 8-9%, 8-9%. That percentage will keep coming down because my net worth is not going to grow that much.
Size will increase.
Yeah, but my 100% of the corpus is with.
Why don't you sell the HFC business once it stabilizes? Would you sell it in 2-3 years?
Yeah, see, we have given ESOPs, so obviously it will go for IPO.
No, but sell it out completely. If you're wired around equity, why do you want
this is not the forum to discuss this thing, but whatever is good for the company, we'll do it. It is whatever creates value and what is right for the growth of the business and the entire Motilal Oswal group, and good for the shareholders of the company. Yeah. More particularly for the minority shareholders.
No, I understand. I mean, if a franchise is centered around equity, when equity markets go bad, the franchise will see volatility and markets will punish.
But the whole idea was to stabilize the underlying profitability. So earlier we had broking like used to gyrate between 0 and 1. Then we said let's do fund management. So that has brought. I mean, in AMC, you don't have that kind of. It's a very stable business. So you have very volatile broking. Then we have very stable asset management. We thought that another small fund-based business we do, that is in HFC, that will give further stability. So what will happen is if the two operating businesses are stable, and one is a little vibrating, you still get fairly predictable kind of P&L, and that is a source of. I mean, market is about jo dikhta hai wo bikta hai. So if you bring more predictability, stability to the earnings, the discounting is much better. So that was all thought process. But man purposes God disposed.
Then I'm sure. So the entrepreneurial mistakes everybody makes.
Yeah. So I think we are going to play out. I mean, we are not going to see. I don't think one should take any kind of a crazy call when things are down. You must think about. Doing something structural and all when things are booming. And at that point, nobody thinks about that.
I'm thinking. Okay, so I'm going to shift gears, and we've got a sense of your quarterly numbers and talk about what lies ahead for us.
Yeah.
A month ago or month and a half ago, there was only gloom and doom. Nobody wanted to even talk of long-term investing. The sentiment, the mood, the attempt. Everything was down.
Yeah.
Do you think now markets are sending you a feeler that sentiment has improved, and it is time to revisit equities now?
Yeah. See, the faith in equity, I mean, for me at least, it was never a question mark. But as far as sentiment is concerned, it is dramatically shifted. Dramatically shifted. I mean, the courage and the extent of government action, what used to be a dream, is becoming a kind of a day-to-day affair. Like cutting the corporate tax rate from and this MAT benefit and all, staggering. I mean, like we're calling for so many years and comes in just 1-10 days. Then even talking about PSU divestment, okay, it has not happened, and that's why market is a little apprehensive. Kaise hoga, kya hoga? Because first round Air India didn't go through. I wish this time they first plan well. And they must understand how it can be sold, and they must not hesitate in kind of throwing it out completely, because the entrepreneurial once the entrepreneurial spirit comes in this large consolidated companies, I think value post like what happened in Hindustan Zinc will repeat in every single company. Now, how much government wants to sell, how much they want to hold, but then they must relinquish the control. Let it go to the people who can do a good job.
That seems to be the broader
even the deregulation of the petrol marketing. I think I don't know why even say mining, construction, tourism, why these things are still, a lot of, I think government is, now you saw yesterday the ranking came down for ease of doing business. I think this government is doing continuously from 142 to now 63, isn't it? So this is staggering, but then we got to see in that which are the components where they can still do, there are a lot of scopes, all over the scope is there. So I think they are going in the right direction. And as far as the economy is concerned, I'm not an economist, but last year we couldn't understand the downfall. Post ILFS, July ke baad jo, the way market fell.
The way demand collapsed.
The way demand collapsed. I had no clue that this is going to happen like this, frankly speaking. And that was the main pain point in our portfolios. We had 23-24% autos, and that's the worst of the decline.